For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir Technologies is listed on the New York Stock Exchange under the ticker symbol PLTR, and its stock has more than doubled in value since the start of 2024. At the beginning of this year, the stock was trading at a modest price of around $16 per share, and it has now climbed significantly to approximately $34 per share. This remarkable increase in value is largely driven by surging demand for Palantir's cutting-edge data and analytics services, which are playing an increasingly important role in numerous industries. The explosive growth of generative artificial intelligence has further fueled this demand, positioning Palantir at the forefront of this transformational wave. One key event that contributed to the stock's rapid rise occurred on September 6th, when S&P Global announced that Palantir would be included in the prestigious S&P 500 index. This announcement sent Palantir's stock soaring, with the company experiencing a 14% gain in just one day. While this single-day jump was certainly impressive, it's important to keep in mind that the overall trend for Palantir has been bullish for a longer period. In fact, if we take a step back and look at the bigger picture, Palantir's stock has risen nearly fivefold since the start of 2023, an increase that spans roughly 20 months. This long-term growth is a clear indicator of Palantir's strong position in the market, and its ability to capitalize on the increasing demand for data-driven solutions across industries. At its current price of around $34, Palantir Technologies stock is trading at about 31 times trailing revenue. For some investors, this high multiple may raise concerns about whether the stock is overvalued. However, when we consider Palantir's future growth potential, this valuation starts to make more sense. The company's revenues are projected to grow by more than 20% annually over the next few years, driven by its expanding footprint in both the public and private sectors. Palantir has a proven track record of revenue growth, having averaged an impressive 31% annual growth over the last 5 years. This consistency in revenue expansion underscores the company's ability to scale its operations effectively and continue delivering high-value services to its clients. In addition to strong revenue growth, Palantir has made significant strides in improving its profitability. The company's net margin has steadily increased on an annual basis, and it has been profitable for the last 7 consecutive quarters. This achievement is particularly notable given the challenging macroeconomic environment in recent years, where many companies have struggled to maintain profitability due to factors such as inflation, rising interest rates, and supply chain disruptions. Palantir's ability to not only remain profitable but also improve its margins speaks volumes about the strength of its business model and the value it provides to its customers. Looking ahead, there is a clear path for Palantir to continue its upward trajectory. Many analysts believe that the stock could reach approximately $70 per share in the coming years based on the company's future revenue growth, improving margins, and favorable price-to-earnings multiple. Several long-term service agreements recently signed with major customers further bolster this optimistic outlook. These contracts, many of which are with government agencies and large enterprises, provide Palantir with a steady and predictable revenue stream that will help fuel its growth in the years to come. Additionally, as Palantir continues to innovate and expand its product offerings, it is likely to capture even more market share, further driving revenue and earnings growth. It's also worth noting that Palantir's stock is currently at an all-time high, though the company has reached similar levels in the past. Back in early 2021, Palantir's stock briefly touched $34 before experiencing significant volatility. Over the next 2 years, the stock went on what can best be described as a roller coaster ride, with returns of 18% in 2021, 6% in 2022, and 17% in 2023. While these returns are solid, they pale in comparison to the performance of the broader S&P 500 index, which delivered returns of 27% in 2021, negative 19% in 2022, and 24% in 2023. These figures reveal that Palantir underperformed the S&P 500 in both 2021 and 2023. Or will the company manage to outperform the broader market with a strong surge in value, given the current macroeconomic environment, which is characterized by uncertainty surrounding potential interest rate cuts, inflationary pressures, and geopolitical tensions? Predicting the stock's near-term performance is difficult. However, there are several positive indicators that suggest Palantir may be able to weather these challenges and continue its growth trajectory. One of the key factors driving optimism around Palantir is its increasing scale of operations. As the company has grown, it has consistently reported improvements in its business margins, which have directly contributed to significant increases in net income. In the last 3 quarters alone, Palantir's net income has grown by an astounding 3 to 4 times on a year-over-year basis. While such rapid growth in earnings may not be sustainable in the long term, it does demonstrate that the company is well positioned to capitalize on its expanding market presence and increase its profitability. In fact, Palantir is in a strong position to double its earnings annually over the next 3 years if it can continue to execute on its growth strategy effectively. If Palantir's revenues grow by approximately 1.6 times between 2024 and 2026, as some analysts have projected, and the company is able to expand its margins by about 4 times over the same period, its earnings could potentially grow by 6.4 times. This kind of earnings growth would be transformative for Palantir and could significantly alter the company's valuation. Under this scenario, the price-to-earnings ratio would shrink to less than 1/6 of its current level if the stock price remained unchanged. However, Palantir's investors are betting that the stock price will rise alongside earnings growth, making this a particularly attractive investment opportunity. Rather than seeing the price-to-earnings ratio shrink from 190 times to around 30 times as one might expect, many investors believe the multiple could stabilize around 50 times. If this is the case, then a twofold increase in Palantir's stock price becomes a very real possibility in the coming years. Under this scenario, the stock could rise to approximately $70 per share, offering substantial returns for those who invest today. As for the timeline for this high return scenario, it's important to keep in mind that the exact timing may not be as crucial as Palantir's overall trajectory. Whether the stock reaches $70 in 1 year or 2 years may ultimately be less important than the fact that the company is on a solid path of revenue and earnings growth, with business margins continuing to improve. As long as these fundamental factors remain in place, the stock price is likely to respond positively, regardless of the specific time frame. In summary, Palantir Technologies has experienced an exceptional rise in its stock price throughout 2024, driven by growing demand for its data and analytics services and its role in the burgeoning field of artificial intelligence. While the stock has seen periods of volatility, Palantir's consistent revenue growth, improving margins, and long-term contracts with major customers suggest a bright future for the company. Analysts believe the stock could double in value, potentially reaching $70 per share in the coming years. Despite challenges in the broader macroeconomic environment, Palantir appears well positioned to continue delivering strong returns for investors. As long as the company stays on its current growth trajectory, with expanding revenues and improving profitability, the stock price should reflect these positive developments. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.